Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
Hello and welcome to Inside Blockchain, your one-stop for everything crypto and blockchain. I'm your host, Faith Equari. If this is your first time watching this program, make sure to follow us across all social media platforms and subscribe to our YouTube channel to stay updated in the ever-evolving world of blockchain and cryptocurrency. Do well to turn on your post notification button. Recently, crypto startups and companies shutting down have been making rounds in the news. For one, the peer-to-peer cryptocurrency marketplace Paxful shut down its operations. Nigerian crypto and Web3 company LaserPay shut down after laying off staffs in November and of late failing to raise funds. Other crypto companies like Ripple, Coinbase, and Genesis have laid off a good number of their staff also. Now, with the wide range of layoffs and shutdowns, it is imperative we begin to look into reasons why crypto startups and companies are failing. Reasons range from regulatory hurdles to mismanagement of funds, to marketing strategies, to technical expertise. There's so much we could mention, but today we will delve into the conversation as we extensively discuss why crypto startups and companies fail, especially in Africa. And our guests will be joining us in this conversation. Let's go on a quick break. When we come back, we'll get into the conversation. Don't go anywhere, stay with us.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency only on Crypto TV Plus.
Searching for target. Target found.
Hey guys, welcome into the metaverse on Crypto TV Plus. In today's video, we're going to be taking a portal into the Robo Hero metaverse. Let's go Robo! Robo Hero is the first play-to-earn mobile game with a metaverse built on the Terra network, where gamers can have a good virtual experience while making money. It was developed by 3 blockchain professionals with insight into trading and crypto markets.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back, everyone, tuning in from around the world. This is Inside Blockchain. I am Faith Equari. If this is your first time watching this program, make sure to follow us across all social media platforms and subscribe to our YouTube channel to stay updated in this ever-evolving world of blockchain. Today, we'll be discussing why crypto startups and companies fail in Africa. Joining us in this conversation is the founder of Blockchain Nigeria User Group, Chuta Chimeze.
Thanks for having me.
Great. It feels amazing having you here. And we'll also have the investment manager at adage, William Phelps. William, how are you doing today?
Very well, thank you. No, thank you for having me.
Great. So let's get into the conversation. Trisha, let me start with you. Now, why do you think a lot of these crypto companies are shutting down and startups are shutting down now? Does it have anything to do with what's happening around the world, financially, economically, or it's just based on internal factors that are solely to blame for these shutdowns?
All right, thank you so much for the question, Faye. All of us, we know that one of the biggest challenges for African blockchain companies or fintech companies is majorly access to funds. And with the exposures of some financial institutions that are directly or indirectly connected to some crypto startups. For instance, the banks that were banking some crypto companies and some crypto exchanges that were also VC that had VC backings for some startup companies. The moment they started having those shakeups, it began to immediately affect some of these startups because investors are usually, risk aware. Risk awareness has a way of controlling their response to the market. So for me, I think that because we are not having local VCs that are strong enough to support our startups. And most of the inflows in terms of investment are coming from VCs that are offshore, so to speak. It makes it difficult for us to have the energy to sustain ourselves when some of these shakings happen in the global financial system. And primarily, this is where I begin to look at them. I don't want to mention startup names, but I know that there are significant amount of local startups in Nigeria that currently are shaking and score. I mean, they have tried all that they can to see if they can sustain themselves. But running a business is not a tea party. You have to pay salaries, you have to maintain infrastructure, you have to be in the marketing front and all that. And when the funds are not there, then you have no business pretending that you can survive in that market.
William, Chuta has, said one thing. He talked about funding, trying to have funding to be able to sustain the business. In your opinion, why do you believe, or what do you believe are some of the reasons why these crypto startups companies have failed, despite some of the success margin they have attained over time?
Well, I think fundamentally what we're seeing with respect to the market as a whole is actually quite a natural process. And I think it would be an error to assume that failing crypto startups or failing crypto companies are an exception rather than the rule. Because if we look at the general sort of financial system through its evolutionary history, we've seen banks come and go, we've seen financial products and models come and go, and crypto is no different. And I think that many of the rules and the principles that we've seen, again, in other areas of finance historically, particularly with startups, again, are manifesting themselves in the blockchain sector. Of course, Africa will always be different, I think, to say other more developed markets. But we shouldn't discount it simply because it's undergoing shockwaves. I mean, I think it's very much the case all over the world. But what I will say in particular with respect to African startups and African crypto startups, I mean, as has already been mentioned, we've seen quite a few wobbles over the past weeks and months. Is a question, in my view, of sort of product market fit, because I think one of the great opportunities that Africa presents with respect to crypto and blockchain is actually being able to hedge against wider market trends, such as FTX, such as Paxful, such as Terra, with real use cases. I mean, what I always say to people is that in, say, Nigeria, if you can find a solution to digitize microfinance and it works, it doesn't matter what's happening with FTX or the price of Ethereum or Bitcoin, your solution will work. So I think really focusing on those use cases that are actually market agnostic, let's say, and therefore immune to the market, is most important, and it's something which I think has been missed to date, which is why less developed blockchain economies such as Nigeria feel the shockwaves perhaps more intensely than other regions.
Chuta, a lot of people would say regulation is like the elephant in the room, especially when it comes to the conversation of crypto and blockchain. Now, we have seen the SEC clamp down on some crypto companies. In what way has this regulatory uncertainty impacted the success of crypto companies and startups as a whole?
Okay, so regulation and policy are key ingredients for startups to always consider while launching their products because um, the fact that there has not been clear regulatory pathway that have been set up by most jurisdictions to regulate blockchain and crypto startup and industry generally does not mean that you cannot launch your product. Now, when you want to launch a product as a startup, you have to also consider existing rules, which is really very important because there's no product or there's no startup that you want to launch that is like absolutely new or absolutely unique, that nothing like that existed before, that you could leverage some of the rules and the policies and the regulations that were there before. So, but a lot of startups, they make the mistake of not following that already existing rule. For instance, if you're launching a startup that is focused on on finance, for instance, you won't say that because you're launching a blockchain-based company, you're not going to understand the rules and regulations that guard against or that protect financial services providers. You know, you are going to be interacting with financial institutions. You're going to be interacting with users from the public space. So it's important that startups at that early stage when they are launching out, it's important that they, get conversant with some of these rules and begin to integrate and comply with them from grounds up. It's not when you have already created your product and you've created your startup and you're running your business and the regulations come to ask some questions and you have not taken time to put into place the governance systems that are expected in every corporate organization. You don't have them, and because you don't have them, it becomes very difficult for you to make defense when you're already contravening rules that are clear. So that also part of the reason why some of these startups fail, because I remember the story about FTX, and information came out to show that they didn't even have clear governance structures that should have enabled them to have ground rules how finances flow in and out and all that. And that's I mean, planning to fail from the real beginning, and it can happen to any other startup. So the point there is find out the existing regulatory frameworks that guide the industry within which you are going to be playing. If you're going to be playing in the financial market, in the capital market, for instance, there are security and exchange rules that you can leverage that is somehow related to the industry where you want to play and start complying with them from day one. If you're going to play in the financial services industry, there are rules. For instance, nobody should remind you that that you should do KYC for your customers if you're doing anything that has to do with interaction with the financial service. Nobody should remind you to do that. Nobody should remind you that you have to put some kind of anti-money laundering systems to enable you, even though there is no regulations yet for your industry. These regulations will, adhering to them will protect you in the long run, because it's difficult for you to begin to defend yourself that there's no regulation for your industry, but now they're asking you questions and you can't even provide some answers to the very basic of all the questions that they are being asked. So ground rule is identify the existing regulatory regime that is related to the industry where you are launching your product, and begin from day one to put them into your corporate rules, and run from the grounds of having those rules already put in place.
Amazing. Thank you so much, Chuta, for that answer. Let's go on a quick break. When we come back, we'll continue in the conversation. Don't go anywhere.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency only on Crypto TV Plus.
The floor price of any NFT is important in measuring the value, the popularity, and the utility that NFT provides. So what does NFT floor price even mean? The floor price is the current lowest price of an NFT in an NFT collection, and the floor price of any NFT changes from time to time. It's either moving up or going down. Take for example that I set the My Hand NFT collection initial price for 0.3 Ether, which is about $1,500. If another buyer buys that NFT,
Hello, my name is Chiki and I'm the Bo of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back. This is Inside Blockchain. I am Faith Equari. We have Chuta joining us, Williams also joining us to discuss the conversation why crypto startups and companies are failing, especially in Africa. Joining us also is Igwe Crescent, who is a blockchain entrepreneur. He's joining us to give his 1 and 2 on the conversation today. Igwe, thank you for joining in. How are you doing today?
Thank you. Thank you for having me.
Amazing. So right before you came in, Chuta, talked about and discussed, funding as one of the problems or one of the challenges some of the startups are facing when it comes to, making sure that their company keeps running and is being sustained. Now, a lot of startup idealists have also clamored and complained of no or low number of funding hubs to help scale their products. I want you to elaborate on it. In your opinion, what role does funding play in the success and failure of a crypto startup, and how can entrepreneurs secure the financial support they need to grow their projects?
Now, I think to give more details on that, I would want to say instead of funding, why not call it cash or money? Because when you limit it to just funding, it makes it look like founders need to raise, and which I feel is not really important in business. The most important aspect should be the business making money, right? So, what's your runway like? What is your threshold like? If you're if you're making money, do you have a certain time expected before you start making money? If you're making money at the moment, is it enough, to cover the operational costs and then you still stay profitable in the business? A business that is making money and they're profitable will not really have problem with funding, whether it comes in or not. And I'm using myself for an example. We've been in business for over 4 years at Truzact. Truzact have been around, and we have never raised a single dollar from any investor, and we're still in business, and we've been rolling out amazing products. So, funding is very important, yes, very, very important. But when the business itself is having operational issues, or they are not making enough money, or the money they are spending is more than what they are making, it becomes a major challenge.
William, I want you to lean in on that question. Do you think funding plays a major role in the success and failure of a crypto startup? And how do you think entrepreneurs can, position themselves to secure financial support as they grow their projects?
Yeah, I mean, I agree, I think, with the view that's just been taken insofar as it's a real problem, and I think an error, to assume that all startups require funding. Because one thing I've noticed in the African market in particular, but I think it's a global problem, is almost a rush for funding and a rush for investment. This idea that you've got a pitch deck, you've formed your startup, and now it's time to get investment. When in reality, it's far more important to build a resilient company, ideally bootstrap that company, and actually get a solid product market fit. To prove to potential later investors that what you've built is something sustainable, because building your company on the assumption that you will receive funding is very, very rarely sustainable, and quite often leads to, I think, inefficient and short-term business models. One thing that's also very important to consider as well is that where there is investment, where there is a give, that is to say cash, there is also a take. So it's important that startups and founders consider what they're giving up in exchange for money. That is to say, it might be tempting immediately after incorporation with the CAC to go out and start trying to raise funds. But in doing so, you're giving away equity, you're giving away control, which at an early stage of business development is probably not the best strategy. So, of course, as has been mentioned, whilst cash flow is important and must absolutely be considered centrally for the development and organic growth of any company, it should not be looked at as a sort of a be-all and end-all of business success. And just as a final point as well, in terms of getting funding, I think it's quite a common argument, particularly in, again, the African market, to say, well, that there's simply not enough funding around, or it's much more difficult because I am an African startup or a Nigerian startup, but I don't necessarily think that's the case. I mean, what the whole fundraising issue in question comes down to is about picking the right investors, picking the right time, and being strategic about how you go about fundraising, which I think a lot of startups, both here and internationally, are not necessarily. So I think this view that actually fundraising is absolutely essential to business growth is not the case, and if anything can actually go to harm early stage startups more than help them.
Great. Chita, let's go to you before we go on another short break. Do you think having technical expertise, infrastructure, and a clear and profound use case or value proposition for projects can differentiate one project to another and give them the success they need in the blockchain space?
All right, so trying to also weigh in a little bit on the points that Williams already talked about, which is creating a startup with the sole aim of raising funding from investors has been the basis of what most people do. As you may know, I also work with the Adavers. Adavers is a Cardano accelerator platform that is enabling the blockchain and Web3 platforms to raise funds for their startups, especially startups that have good idea. And we receive a lot and lot of pitch decks from startups. One thing I've observed is that a lot of these startups, their aim is actually to raise funds, identifying the proper market fit and also being able to know if the market that they are targeting is large enough to scale is a different thing altogether, because most of them don't consider that you have a very good idea and that you think that idea will make money is not enough for you to have a startup. You can actually test the market and even try to weigh the size of the market. Is the problem you're trying to solve big enough? And do people have that problem constantly? Or is it a problem that they have today and they will not have the problem tomorrow? And you're trying to build a startup. Remember, a startup is a company that will run with a single idea and grow quickly. And for it to grow quickly, there must be a pressing problem that is solving, that people have constantly every time. But what you see is when people see that, okay, people are building projects or products that are focusing in this direction, they want to also copy that model and start building something in that direction, thereby trying to share the market that has already been identified by the previous startup. Before you know it, everybody is out of business because there's no more problem being solved. I mean, people are not, it's not something that was careful study did not go in before the startup of that idea. Maybe when you come back from the break, we'll talk a little bit more of the technical issues that startup face also.
Thank you, Chuta, for that clear and concise response. We're still having the conversation on why startups fail in Africa. Igwe, let's get to you. Let's talk about some of the things or some of the reasons we have seen why a lot of companies have failed, especially when it comes to using FTX as one of the examples. It came from mismanagement of funds, lack of transparency from the companies to the users at large. Where do you think some of these African startups can begin to work on to make sure that their company builds from just a year, 2 years to having a long-term sustainable plan in the blockchain space?
First of all, I think outside the fact that blockchain is here to stay, we, the builders or the founders, need to, cut down on the complexity of what we are building. There are so many buzzwords around blockchain, and people are really not looking at the real issues. Everybody's just building exchanges, API, building API on top API product. Nobody is thinking how can this thing be simplified, to be integrated into the market human that can actually accept payments out there in the streets. Now, for us as choosers, for example, we thought of an idea, right? Everybody is doing crypto, okay, here and there exchanges, and then nobody's really considering what happens if anything happens to you, for example. Now, I personally know about 2 people that have died in the last 2 years, and these guys had bitcoins in their wallets. Now, they are dead. What happens to the assets? Nothing happens. So we decided to build a system, right, that allows anybody, even in the course of death, to transfer your assets to your loved ones, up to 10 beneficiaries. It's one of the features we have as TrueZact. Now, we have other features we are working on. So founders need to think of systems or solutions that applies to real problems, not just about having to build another exchange or a payment solution or another token, then make promises, and then next thing you have a token out there you're trading on the market. So we need to build blockchain around things that are actually sustainable. How does it affect transport? How does it affect politics? How does it affect agriculture? How does it affect real estate? How does it affect health? So we need to start building blockchain solution around solution that people use every day. So this way, it can gradually integrate into people's life without having to be forced. So we need to cut down on the number of exchanges. We need to cut down on the number of dApps, software, this, da, 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 and build real solutions that people use on day-to-day basis.
William, do you agree with that? We need to start building more projects and products that um, provide good use cases and profitable use cases to people than just, based on just the hype and the buzz around some of the projects that we have right now.
Yeah, I think that's absolutely right. The challenge now, as far as I see it, for African blockchain developers is mass market rollout. It's what I would describe as the mobile money effect. So if you were to go to Kenya, for example, and ask anyone on the street about mobile money in M-Pesa, they would say it's fantastic. It's so easy to use. It's great for the average consumer. Really great solution. But if you were to ask that same person to describe how mobile money works, they probably wouldn't be able to. I wouldn't be able to give a blow-by-blow account of exactly how settlement and liquidity and everything is managed. But for some reason, mobile money is heralded as this sort of great mass market use case. Blockchain, on the other hand, is seen as incredibly complex. It's seen as a scam in some cases and a bit of this sort of esoteric myth. And I think a large part of that is because we haven't seen an M-Pesa type product for blockchain yet, one which is actually suitable for mass market consumption. People talk a lot about education, but I think that education is the wrong way of going about things. I can't think of a product that I use regularly or that is regularly used by most people that requires education. I like things that I can pick up, get into and get underway with that don't take up time but are useful to me. And that, I think, is what blockchain developers and founders really need to target. I mean, if you're trying to develop an NFT platform or some protocol or a dApp of some kind, who's going to be using that? A tiny portion of the market at all, and even that market's incredibly saturated. So no, I think it's absolutely right. It's now about tangible use cases, mass market rollout, and building something that's actually sustainable for the average consumer rather than just the niche blockchain enthusiast.
Amazing. Thank you so much. As we wrap up today's episode, Chita, let's start off with you. Moving on, what is the way forward? Many are losing jobs and are also losing trust in working in the crypto and trading in the crypto space. What is the way forward as it seems to adoption, education, and also regulation? What do you think is going to be the driving force for making sure that we reduce the number of shutdowns and layoffs that we're experiencing right now and begin to build better and begin to have more people come into the space to, build and also innovate?
Okay. Unfortunately, I'm not really very enthusiastic about the immediate future and on the short time um, playing because nothing is actually happening that you say that, okay, because this thing is happening on the positive side, African startups or Nigerian based startups are going to get better at what they are doing because we're not seeing massive infrastructural development. We're not seeing massive investment in the talent sector. We're not seeing massive regulatory policies coming out to help the landscape. We're not seeing policy, makers coming up with any of the right policies that we can bank on to change the narrative on the short term. Okay, because you have to understand that when you look at the challenges that startups in Africa face, there are so many. I wanted to talk about the place of infrastructure for most of our startups that is maybe nobody is seeing that because, of course, we are conversant with the problem of power. We are conversant with the problem of, poor internet connectivity. But do you know that in the last few weeks, if you do anything that has to do with either hosting or using APIs for hosting a server or using API or any other cloud service, you discover that most of them have increased their prices by over 50%. And if you're a startup and you are experiencing things like that, it will also tell on how successful you can be. Then you also consider the policies from our central bank that make it difficult for local startups to be able to make payments. I've seen startup founders that struggle on how to make international payments for the servers that they are using or the APIs they are using because local banks and systems that would have enabled them to do that easily are not available. That's infrastructural problem. And because I'm not seeing much being done to address those issues, I'm very worried to come and start being hopeful for that future that everybody will want me to say that, okay, so and so thing is going to look forward to. So for now, I think we have a lot to do. Government and private sector have a lot to do to make sure that we help the ecosystem one way or the other.
Amazing. Williams, let's get to you. Moving on, what is the way forward?
I mean, I think as Tutor has said, there's a lot of foundational work that needs to be done, in the sense that it would be naive, I think, to assume that just because there is a popularity in the sector, there is liquidity, that naturally translates into any kind of sustainable or self-sustaining future. I mean, as far as I see it, I think regulation needs to lead the way, insofar as current uncertainties around building a stable foundation, both in terms of companies and investors, prevents, I think, the full potential of Nigeria's blockchain sector and Africa's blockchain sector at large actually sort of being unleashed. But beyond that, I think there needs to be a recalibration in the entrepreneurial space, at least. Thinking back to that comment I was making before about the mobile money effect. And we need to start seeing solutions that actually tangibly impact the mass market and are used by someone only with USSD phones just as much as they are by someone with the latest iPhone. So I think that kind of shift in focus, combined with a regulatory realignment, or indeed alignment for the first time, will build a solid foundation, and then I guess from there we can see where things go. And just as a final point as well, I think one major issue, at least more on the investment front, is that a lot of countries such as Nigeria are missing out on many of the benefits of investment because of the, I guess, vague regulatory regime. I mean, Nigeria, in terms of Web3, is not a good place to invest and put your money. It's typically Delaware or an offshore entity. So again, I think with that clarity and with that alignment, the country will be able to reap the rewards, and then from there, that foundation I mentioned will be more solidly built.
Amazing. Igwe, let's get you. What is the way forward? What is the future of crypto and blockchain as it regards to companies and startups shutting down and laying off staffs?
The way forward is we have to build back trust. The capital market basically thrives on trust. So when people trust a sector or a company, for example, people will be willing to bet in their money to it. They will be willing to, raise more money from somewhere just to pour into it. The reason why a lot of people are currently using, dealing with Bitcoin today or crypto activities is because they trust that this thing has future and it's going to do well. So more people, if we are losing trust, it means that the current players are doing something wrong, and we will need to have a change of psychology on it. And that will now have to boil down to the founders, the builders, and the enthusiasts within the community to think long term and do things better. Some other traditional people see anything that have to do with crypto as scam, and this is where we need to prove them wrong. This is where we need to build real solutions that solve real issues. They could see that this is not just all about promises, invest, make money, turn up ROI and the rest of all that. So when there's trust within the ecosystem, people will be willing to do something within the ecosystem, and they will come in. The system will grow. When it grows, more people get it, there's a wave, and then it will thrive. Everybody is happy. So it's about all of us doing what is right. Like Chuda was saying when I joined the session, he was saying something about regulation and KYC. So every system needs to do proper KYC, especially the fact that crypto transactions are anonymous. If you're running a platform, you have to KYC your customers. You have to make sure that you know the people you're dealing with. It's a very, I think it's one of the surest way for us to have a headway with what we are doing. And then companies on their own should also learn to be transparent. At the end of the day, there's transparency on the institutional level, and then there's also transparency on the user level. By both parties doing that, people are watching. More people will come in, and there will be growth.
Amazing. Thank you so much for coming in on the show. Gentlemen, we have been able to discuss extensively on why crypto startups and companies fail in Africa, especially in Africa. And I hope that we begin to look into some of the things and some of the solutions we can provide for startups to begin to scale properly, especially when it comes to Africa and Nigeria in particular. Thank you so much, Mr. Chuta. Thank you, Mr. Williams, and also thank you, Igwe, for joining in on today's episode.
Thank you.
Thank you.
Amazing. And that will be all on today's program. You can get more market updates and all the happenings captured within the world of blockchain and cryptocurrency on our website, cryptotvplus.com. Follow us on all social media platforms at CryptoTV Plus to get daily info on our programs. Thank you for staying with us. I had Chuta, I also had Williams, and I also had Igwe, who discussed extensively on why startups, crypto startups and companies fail in Africa. I am Faith Aquari. I'll see you next week.